There's Adam. Got you, buddy.
Hello, Dale.
Hey, Adam, how are you, man?
Good, good, good. Can you see me?
Can see you, hear you. Everything's cool. I put on a tie for you, man. So let's start with Janet Yellen this week. Not even saying the glass is half empty. It's empty. She even
It's
talked
empty.
about QE. All right, even talked about QE, something people thought was crazy a few months ago. And then we get these numbers, Adam. You know, the ISM wasn't bad, the NFP wasn't bad. Just another chink in the armor of the omnipotent Fed and credibility becoming more of an issue. What is your reaction to what she said and what we're getting?
Yeah. I mean, the dollar's ripping here, right? I mean,
Yeah,
the market wanted to see a little bit of that hawkishness, right? And
yeah,
she has been so stubborn, and not even like, I mean, if she would have just given some kind of little hint last week, or earlier this week, that a hike could come, I think the dollar would have ripped. But it was just the opposite, and she was very disciplined. And I really believe that the Fed doesn't think inflation is there. Um, they want to see the evidence. They're not worried about inflation overshooting. And you know, now we're at June. If you look at the probabilities, it's 28% hike. Now that's up from 20% yesterday because the data was better. And the Fed's done this we're data dependent thing, right? They've said it 100 times, we're data dependent. Well, the data's been good all year, really, even when markets were roiled. Now they're blaming the international outlook
right.
because they are. They're, you see the glass half empty, but they are saying the domestic side is pretty good. But they seem to say at the same time that's not good enough, and it's not going to be good enough to create inflation. And we know that Q1 is going to be pretty soft in terms of GDP, and we just had construction spending just now. That's a big component in GDP, and it will be soft. So I think you're down looking at maybe September, and you need the good data to keep up, and it probably will. And then the other question I'll ask you is, well, if you're not buying the dollar, what do you buy?
Yeah, that's a big question to me right now, Adam, we've had this move in the dollar to the downside, and I don't think it's completely washed out the longer-term picture for a bull market in the dollar, but it does definitely stretch out, and I think a lot of people have been shaken out of their bearish euro positions. And I'm wondering, in your view right here, if you're a dollar bull, this has got to be a great dollar buying opportunity, but I could also make a case for, even though the euro is going to pull back from this 114, 115 level, as long as we hold, say, 111, that possibly the highs are not in yet, and we could even see 118, maybe a 120 handle. Do you think that this bull market in the dollar, the back has been broken, or should we be stalking long dollar positions here?
I mean, I think you have to. You have to go back to that. Well, look at the data. Look at the domestic picture. It's pretty good, and nowhere else is really better. Uh, yeah, for now, I think the dollar is going to be on its back foot. Some of these technical breaks you just can't argue with them. The way Kiwi's broken out, a lot of the commodity currencies, the euro is really on the verge of breaking out, although it's come back down today. Dollar yen, that 111 level is as hard as the BOJ is going to fight it. And back again today down towards 111, and now we're back up at
Yeah,
112.30.
yeah,
Uh, I like the dollar, but we're going to talk about seasonals as well. And April is, if there's one month on the calendar where seasonals are just extraordinary and consistent, it's April. And the story time and time again is dollar weakness in this
interesting.
month.
Okay, well, April Fools, maybe the dollar's rebound is April Fools here. Adam, I wanted to ask you about other seasonal things and cover a few things. One thing I know is you were so right, so big on the crude oil market last year, being a bear, and I believe the last time we got together, I said I thought we could rally back to 38 to 41, which has been achieved. You said 38 was possible. In fact, I believe it was in February. It was a positive seasonal month for crude, and it bottomed at 26. So I guess the question here is, a lot of bears are saying it's just a bear market rally in crude, and it's going to reassert itself. And and take out that 26 low, are you still in the long-term bear camp in crude oil?
Yeah, I am, but the timing is everything, right? The first
Yeah.
really half of the year, it is a good seasonal stretch for oil, and it's played out very nicely. I don't know what the numbers were last month, with about 13% rally
Yeah.
in oil, and it was something we talked about on that squeeze. And it's if you just look at the psychology of the market, this feels like the squeeze hasn't been enough. The shorts are still there. They're still bearish, and you see why, because every week inventory numbers go up. Iran
Yeah.
pumps more, and today Saudi Arabia says they'll pump as much as they want, so long as Iran is. So, and that's why oil's so down today. Why it's down to $1.40 today, but at the same time, it just doesn't feel like it's gone high enough yet. So, and for April, it's a good month seasonally. It really stretches from February to May is a great time seasonally for crude. So, I mean, the levels are important. Up at that, they say that 44, 45, kind of, it's around the break even for a lot of shale. So we get up there, they'll just turn the taps back on, and that will keep it down. And then again, the inventory numbers are so high, and I don't think there's so much upside that you need to worry about. Maybe a little bit more today now that we're down to 37. But
So I sense you're strongly neutral in crude.
I am. I'm bullish on the sea. I don't think I'm bearish, but it's not yet.
Right, okay. And I sense that you're strongly neutral the dollar here, too.
Well, if we talk about seasonal.
And it's okay. I mean, look, you and I are put on the spot supposed to know where things are going to go every day. And isn't it a fact that there are time periods where there's more wisdom to say I don't know and just wait for markets to set up, and people will ask you for an opinion, and it's hard to say those words, I don't know, isn't it?
That's why you got to get on TV or NBC like those guys, and then yell and scream, and if you're wrong, yell and scream about something else. But you're obviously right.
Sorry, go ahead.
Today's such a good example because it's non-farm Friday. Everyone wants to trade it, but you have end-of-month flows, beginning-of-month flows. It's non-farm periods, about 5 or 6 other big releases to go on with it, and it's that there is a lot of wisdom in staying in the sidelines until there's some clarity, and until that everything sets up just right. And I feel for technical traders too, because you had some of these breakdowns in the dollar, and now they're reversing on data or on flows, and you'll start to see on Monday some trends assert itself for the month. And if you want to talk about seasonals, it's extremely good month for the Aussie, for the Canadian dollar. A lot of these moves feel like they've happened already. Right. March was a bit better of a month for the U.S. dollar, and it tried to climb higher, but the Fed just was, it cut the legs out under it from a few times. And I talked about gold shorts last month, and if you look at gold last month, you had bullishness. You had the Fed being more dovish. You had Yellen being more dovish. You had a terrorist attack, and gold still couldn't rally. And now gold's coming off here a little bit. I mean, gold's up 20% for the year, so we can fall 10% from here, and it's still in a
the CLP setup was pretty bearish in gold. I was going to ask you about it because I do have a memory like an elephant, and the last time we were on, you said keep it simple, and one of the trades was short the yen. It broke down at 116. And the other part of it was buy gold. And don't you think it was kind of a tell this week when the dollar was getting slaughtered that gold could not catch a bid while the dollar was under pressure? And to me, I think that this shakeout in gold could take us all the way down to 1,100 in the weeks and months ahead. And that would be a great buying opportunity in my view. So what about this triple bottom in the yen, Adam? Do you think they could hold them? I rather, as a technician, I don't trust triple bottoms. It means that people have 3 chances to buy something at the same level without taking heat. You have any more downside projection? Should we take out that triple bottom?
Seasonally, there's not a lot going on. Just get that out of the way in dollar yen this month, and it's this Japan story. Will they let it go below 111? There has been that official take there, that fear of that, and you have the market is very long yen, short dollar yen all of a sudden. You see it in the CFTC numbers, and you're tempted by the long side, but again, you think you can see this kind of flush maybe down to 108 before the BOJ steps up its game, and it sounds like they're willing to dig back into the bag of tricks. Not quite yet, but they will, and the government does not want to see that stronger yen. We had the Tankan numbers were out overnight,
Terrible.
weak again in Japan. It's just almost a hopeless situation where they've tried so much to stimulate some kind of growth, and it just won't happen. Now, the downside may come on something like some negative risk aversion, but if you have the Fed and every central bank really pumping and stimulating, even China, then what's the the catalyst to make stocks go down and to create risk aversion?
Okay, let's go to your neighborhood, buddy. Canada was under a lot of pressure because of the strength in crude USD CAD, and now we're at some pretty significant support levels. We had a nice little bounce. I don't know if it was a short squeeze starting from yesterday. Any type of long-term view on Canada from the sub 130 level?
It's been a brutal week for CAD traders. It was all flows of these oil settlement flows and that strong Canadian dollar bid late in March, even as oil was falling, or on the days it was falling, and now it's snapped back, right? And a lot of the good news is in. The government came out with a very stimulative budget. We were waiting for that, really. The GDP number yesterday was strong. That's for January. That got everyone excited, but then it reversed. Most of the good news is in, but oil can rally further from here. The seasonals are very good for the Canadian dollar here.
Yeah, and so that could take it down to what, 125-ish? You think?
I think that's a spot to buy, right around there, 125. 128 wasn't a bad level either, because I think 145 is coming back in the second half of this year when oil rolls over, goes back down to 25 again. And the Fed maybe shifts back to being more hawkish. If you look at what's priced in for year end, it's a 60% chance of one hike. The Fed is still talking about 2 hikes. The risks might be to the upside of that, or at least that we flirt with the idea of hikes again, and that's the dollar side of the CAD trade. So the other seasonal, if we want to get into it, is cable. This is one of the all-time great months in seasonals, and it's 11 years in a row cable higher in April. And you just don't see that very. I think it's since 2001, one time cable's been down in April. There's the Brexit story.
Yeah.
But if you look at it, maybe on the Brexit side, and I don't want to fit the picture to the seasonals or anything, but a lot of the fears in there already. Everybody's dabbled with this Brexit. The vote is until June, so there's no immediate fear to go into the market, and maybe we can have a bit of a recovery here. Certainly the levels today at 141 are a little better than they were yesterday.
Yeah, and Euro Pound getting very stretched to the upside based upon that fundamental worry of the Brexit. You have any levels that you're paying attention to in cable where you might be interested in stepping up to the plate?
If you see any handle below 140, the market is so much money moving through London, and they always feel like, well, it's going back to 150, it's going back to 160. It always finds that level. And that 3 handle is awfully enticing.
Okay.
So that it's not far away, if not even before then. So I think we're really close to a spot that cable can do better. But economic data is okay out of England, and that's saying a lot in this environment, right? If you're doing okay, it's like you're a winner in the global currency world.
Right. Also, I remember we left it off last interview where you asked me for my view on the stock market. That was back in February, and I said we were close to a low and there would be better shorting opportunities in April. Here we are in April, about 3% from all-time highs in the S&P. It's had a little pullback, but it's since reversed. Any view on the equity markets up here? Are you in the camp that we're going to get new highs, or is this going to be some type of failing rally up here?
We were both bullish in March there. It was a very strong seasonal month, best of the year, and what were we up 6 or 8% in U.S. stocks. And I don't see the case. Even today you had a kind of reason to sell it. Better wages, Fed talk, even oil down. It's a good negative correlation. The stocks have roared right back. So I don't think it's there yet, and that, I repeat that a lot. We're just not at the best levels for, the major trends are still there. I think, and one of them will be more risk aversion. But I do want to ask you, being in America, about the American election, because I got a different mug here today. If you can see me.
Yeah. So
I got the old Trump.
the political silly season is actually pretty frightening to a lot of people right now. Really, none of this. Are you still with me? Oh, you left. Okay. Well, Adam gave us plenty. He asked me a question and left. Anyway, Adam gave us some thoughts and some views, and now you're back.
There, sorry.
Oh, that's okay. I figured you weren't that interested in my view of the political silly season.
Go on.
There's really, I was thinking that we are going to put in some type of high here in April, and that I think for the first time in a long time, presidential politics are going to play a role in confidence and possibly even a risk-off move into the conventions. And so I'm looking for down into June, July, see if that works out. I really am ambivalent personally. I have more of a fear of the unknown with Trump and fear of the known with Clinton, fear of the unknown with Sanders. So all I do know is that I think the market's going to be concerned about this type of uncertainty into the convention. And then I think into the convention that perhaps we get a rally into the election after the conventions. And I'm actually looking for a pretty good bear year in equities and it to begin this April. Right now I'm assuming this is going to be a failing rally. And I think there's a chance to retest 1,800 again in the S&Ps, and also a possibility if we take that out of 1,550, which a lot of people would call a crash. I call it a 38% retrace of the whole bull move. And,
you know what? You spelled it out so well. I could get behind that playbook 100%. The convention is such a problem now, and I'm the first guy to say that politics are overrated in markets. The amount of talk in politics relative to how much it matters is way out of proportion. But right now, in the Republican convention, you can't. There's no way to get out of it unscathed. I think if Trump doesn't win, you have to bear a lot of angry people, and basically probably, everybody feels cheated, and this feeling just persists. And then if it goes the other way, and he wins, well, you have so much uncertainty there as well, and a lot of anger and so on and so forth. So June, I think you're right. April for right now, there isn't even a lot on the calendar in terms of conventions. Wisconsin, well, Cruz is going to win Wisconsin. New York, Trump will win New York, and then it's mostly a blank calendar until we get into May. So probably you're not going to see the tension and risks just yet. And
I think that the tension is because of their ideas. The idea of a 35% tariff and a Smoot-Hardley 2.0 from Trump, and the ideas from Sanders on the other side of massive spending, and on both sides attacking Wall Street and the elite, and not being that you don't hear a lot of business friendly even from Donald Trump. So I think it's more of the ideas that are out there, and that they're more extreme on the left and the right than they've ever been in my lifetime. And if it's my lifetime, it's yours, because.
And some of it's just a feeling of inevitability that some of these things are going to happen, whether it's more protectionism, more regulation on Wall Street, it's more less immigration, these sort of things. It's a sense of inevitability that we're swinging either right or left or some combination of both. And
well, Adam, you and I talk about a lot of different pairs and geo and political stuff. As you go home this weekend and you look ahead into April, what do you have the most conviction about as far as a trade setup? What are you looking to do this month? And you know, it's like I tell people, Adam. I knew guys that never left the cattle pit their whole career, and they were successful because they knew one market like the back of their hand. They didn't have to know what was happening in the S&Ps or the euro dollars or the Deutschmark when it was being traded there. So selectively, what are you favoring going into April?
Yeah, I wish I had a huge amount of conviction, and just thinking about it as you say it's not that, it's not there. But if I'll stand out and say it, I think it's the euro longs. It hurts the most people. Seasonals are okay for the euro. I mean, that sterling seasonal trend. I just won't fight it. And the temptation is to buy the dollar, and I think the market is going to want to buy the dollar. But it might not just be time yet, and I think it's probably stock longs too. Unfortunately, it's just set up too well, but it's come a long way here yet. Maybe Shanghai Composite, they're stimulating there. That might be the spot if I had to pick one.
Well, I think you and I are both in the spot where you don't have a high degree of conviction level, but you know what? That could all change for you and me early next week, and like the key is to be patient. And what I try and teach people is if you see yourself skimming around from pair to pair and you hear your mind say, I need to find a trade, it's time to shut your platform off, because the good trades smack you right in the face. You can't ignore them. You agree?
I'd say I trade the headlines too, so I mean, just keep the eyes open and wait for the news to hit. OPEC meeting mid-month. It would have been a token freeze anyway. That's going to make things move. And there's always going to be plenty of headlines, and today was a big headline day, and it'll ramp up again next week.
Well, you know what they say, people who buy headlines today sell newspapers tomorrow. You ever hear that one?
I never heard that one, Dale. You always.
But I'm pretty sure. Yeah, I'm sure. Anyway, I look to buy a paper from you at your newsstand when I come up to Montreal. Adam, thank you so much for your time today, and I'm sure that the next time I talk to you that there's going to be some more clarity from both of us. Really good hunting during the month of April, and thank you for your seasonal excellent elite work, buddy. And
thanks.
What's the best way for people to follow you more than once a month or so when they see you here?
Yeah, Forex Live right now. I was waiting for this. I'm putting up their seasonal package just now. It's our top 5 seasonal trades for April at forexlive.com or at Forex Live on Twitter.
Good hunting, partner.
Thanks so much, Dale.
All right, Pro. Take it easy, Adam. Everyone thank Adam for his time today. The community appreciates you.
Hey.
Who loves Adam? Give me a Y. All right, they're coming. You feel the love?
Feeling it.
All right, buddy. Have a great weekend, Adam.
You too, Dale.